Hey everyone, welcome back to Corporate Decoder, the place where we decode, analyze, and make fun of corporate filings. Today we're diving into HPS, Corporate Capital Solutions Fund's latest quarterly report. And let me tell you, it's a bit like unraveling a cable knit sweater after your cat got to it. Are you ready for some seriously interesting financial shenanigans? This SEC filing gives us the inside scoop on how HPS, a business development company, is doing. They're trying to make money by investing in other companies, mainly through loans. We will learn how they're managing their money, what they're earning, and the risks they're taking. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join the discussion. First things first, the report tells us that as of May 12, 2025, HPS had 34,402,002 common shares outstanding. That's a lot of shares floating around. But before we get too excited, let's acknowledge the usual disclaimer. It's basically saying, hey, this report contains guesses about the future, and the future is unpredictable, so don't blame us if things go south. Now let's get to the good stuff, the financials. This is where we see how the company is actually doing. Let's zoom in on their investments. It looks like they had about $1.3 billion in non-controlled term-affiliated investments, whatever that means exactly. Basically, investments in companies they don't own. The fair value, what those investments are actually worth, increased a good amount since the end of last year from about $985 million. That's a big jump. Zooming out to the big picture, their total assets are about $1.4 billion. So investment number is a very important. But what about what they owe? Debt. They are in debt for $528 million. That's almost double what it was at the end of last year, which was around $290 million. So they definitely took on more debt to increase their assets we talked about. Next, common shares have a value of only $309,000, which is tiny. Most of their money is coming from additional paid-in capital, about $74 million. In plain terms, that's money investors have directly put into the company. Finally, the key number, net asset value per share, which is like the sticker price for the company. It's $26.22, a slight increase from about $26 at the end of last year. Moving on to the statement of operations, which shows how much money they're making or losing. Their interest income, which is the most important type of income for a lending company, is $25.5 million. This is because the company is a new company and had much lower investments in the first quarter last year when it made zero. Digging deeper, this is interesting. Expense support looks like the advisor reduced their fees by a bit over $2 million. We can see how much they like paying taxes when it says excise tax expense. They also have a net realized and change in unrealized loss of $222 million. This is not great. It's due to bad performing investments. All right, let's see where the money's flowing using the cash flow statement. Their net cash used in operating activities is negative $331 million. This means they are spending way more than they're earning from their investments. But don't worry, they're borrowing a lot. The cash is coming from borrowings on debt, being at $382 million to $10, and proceeds from issuance of common shares coming in hot at $135 million. That's how they can afford to spend so much. Scrolling through the schedule of investments, which shows exactly where their money is parked, we see a lot of first lien debt to various companies. For example, which has $40.7 million in it. The interest rates are generally all over the place depending on the company and how much it's worth, from 7% to 15% generally variable. You'll also notice strange things. For example, is that negative cost? That's an interesting strategy. Let's do a quick comparison with how the investments were set up at the end of last year. The values and strategies are actually fairly similar. It's an active and well-managed fund. Alright, let's decode their significant accounting policies, which is like the secret recipe book. It basically says they follow standard accounting rules and that some numbers are just estimates and word for guesses. They use foreign currency forward contracts. What's that? Basically, the company is exchanging different currencies to not lose money on their international holdings. Moving on to commitments, they had some agreements with Macquarie Bank where they were planning to buy certain investments. Seems like these agreements came with some fees and potential risks. Alright, time for some risks. It says the company admits it's exposed to valuation risk, meaning their estimates might be wrong, and interest rate risk, meaning if interest rates change, their profits could suffer. A large amount, almost everything, is on floating rates, so they have a big risk from changes in interest rates. If rates go up a lot, they could make an extra 20 mia. However, if the opposite happens, the models are showing they could lose a ton. Finally, some formalities. They check their disclosure controls, fancy word for making sure the report is accurate and honest, and it's all good. At this point, you might be asking, why is there nothing to read after this? That is because the report is empty. Nothing happened and all is good, as they claim it is. So what's the story here? HPS Corporate Capital Solutions Fund is aggressively deploying capital, taking on debt and relying on some complex financial maneuvers. The fund is actively making and closing deals and growing fast and expanding into different areas to increase profits. It's very hard to know if HPS is actually doing well or just getting by, and we don't have much to compare it to. They're definitely facing some interest rate risk, but their investments could be interesting. The financial world is a complicated place. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description and share this with your friends. Thanks for watching. See you next time.